Financial markets and just about everything else are governed by rules, and the rules of financial markets are really quite hidden. It can take many decades to uncover them, and there's always intercorrelation and interconnection. Rule 225, Bitcoin cannot escape the stock market's gravity. This is a particularly important rule to understand. In this video, we're going to go through it, but I'm going to show you the latest data from the markets and then draw it all together for you. Let's run the numbers. Welcome back, CTKS family and Elite Service members. What you can see here is a chart of the S&P 500 versus Bitcoin. And when you notice this chart, you'll notice that Bitcoin cannot escape the stock market's gravity. They are literally moving in lockstep with each other. Of course, from time to time, they don't exactly overlay, and they're not supposed to, and we don't require it. What we require is an understanding of directional correlation, interconnection, and how structure impacts all of these charts together. When you understand that Bitcoin simply cannot escape the stock market's gravity, you're on the road to financial freedom, because it's one of these particular rules that is so incredibly profitable. If you're liking the content, please smash that like button and don't forget to subscribe. Okay, let's get into it. One way that I like to look at Bitcoin, just before we get into an overview of what's been happening in the past 24 hours, Bitcoin is a highly risk-on and risk-off signal indicator. It's kind of like the VIX on steroids. It trades 24/7 by 365, and you can see that it is a very, very good indicator of where the S&P 500 would go. Now, why is that? It's literally because Bitcoin sniffs out in a very sensitive way, risk on or risk off. It is an alpha asset class as far as risk detection. So it's very important to keep your eye on. If you're looking at the stock market and you're not looking at Bitcoin, you're missing an incredibly important signal. And you can see it's just playing out in real time before your eyes. Just keep this in mind. It is a superpower. Now let's look through the main markets, and then let's start to bring this all together. Okay, let's go. Welcome back, CTKS family and Elite Service members. In the past trading session, the main markets were up 0.43%. Consumer discretionary information technology did the best. Materials communication services did the worst. Looking at the main markets, Apple came down 1.14% and Google was smashed, down 7.51%. Nvidia did quite well, up 3.1%. As anticipated, the federal funds rate stayed exactly as it was at 4.5%. The next FOMC meeting is on the 18th of June, and currently there's around a 20% probability of a rate cut. The stock market fear and greed index is currently 56, and we've seen it's done a really great recovery. In the past trading session, the Dow came up 0.7%, the S&P 500 0.43%, and the Nasdaq 0.27%, so very minor gains. The crypto market is currently up. Bitcoin is trading up 2.58% to 97,145. Ethereum up 1.59%, Solana up 1.85%. The crypto fear and greed index is currently at 53, and we can see that there's been that kind of recovery that we saw inside the stock market. We know why this is the case. And we know that's because of Rule 225. Bitcoin cannot escape the stock market's gravity. Gravity is a very important concept. A lot of people just look for perfection. Bitcoin goes up, the stock market goes up. Please don't do that. Gravity is a little bit different. You're looking at directional correlation, the things moving together on average over time. Now, why do the markets move up and down? That's realistically the next most important question, and that is because of Rule 289, price waves. Now, what's a price wave? It's something like this. That's an uptrend, and this is a downtrend. Now, a price wave is simply a movement between structural boundaries, structural support, structural resistance, and structural support. All price waves are structurally bound. If you understand where the structure is, instead of just seeing Bitcoin and the S&P 500 just moving in lockstep, you'll understand why they reverse. And to be more of a financial blessing to yourself and those you love, knowing where the structural boundaries are is so incredibly important. We can see here that the S&P 500 and Bitcoin overlaid. Now what you notice here is as Bitcoin is coming down, it's signifying that there's weakness inside the main markets. And also you can see it very prominently here. This is because Bitcoin picks up on any risk-off signal. If you have risk-off, that means prices are coming down, fear is going up. Risk-on, prices are going up, and fear is coming down. I was talking before about structural levels. Typically, what most people do is they just look at a fraction of price action. For example, just around here, and they would look at this and say, where is the structure inside the S&P 500? Statistically, this is a really bad idea because you're getting a very small sample size of actual price action. In fact, if we look at this, and we would just to draw a particular measure across here that gave us an idea of how many days were there. This is on a daily basis. You can see it's 77 days. Now, when we put that in context, the S&P 500 has been around since 1871. That's literally 56,344 days. If you divide 77 into 56,344, and then you convert that into a percentage, it is literally just about 0.1% of price action. Now just put that into context. Say it was just 1% of price action. That means that you would be ignoring 99% of price action. This methodology of looking at structure in that kind of way is disastrous to your profitability. As a core developer of technical analysis, I can tell you that you must look at all of price action. And that's exactly what Level 1 and Level 2 standard certification inside the CTKS method does. It helps you to understand where all of the structure is, not just a little blip of it. To give you an analogy, if you were driving your car and you had 99% of your front windscreen obscured, you're likely to A, have an accident, or B, drive just normally. Let me know in the comments. Now what we're going to do is just to zoom in here and observe the structure in the S&P 500. Now when we zoom in, I'm going to push this down to a 15-minute basis from the daily basis. This is actually how you need to look at structure. Now we're going to put up the markup of Level 1 and Level 2 standard certification. What we can see around this 55 level, there was a level of overhead structural resistance that was pushed through. When you understand structure, you understand where the sellers are going to come in and where the buyers will also come in. If we don't get a movement that is sustained above a structural once resistance level, we cannot turn it into support. If we keep on making lower highs, that's a really bad thing to observe. That means the sellers are in control. This is basically an exhaustion move. A lot of people could misinterpret this as we're up to a positive CTKS gap and we could really blow out from here. What you want to think about all the time is how many structural resistance lines we came through and how much consolidation is required to absorb all of those sellers. Therefore, we must put in a degree of context around structural support and structural resistance levels. But one of the things that we're seeing here around that 5610 mark, we've hit a fairly good area of structural support. If you have very light structure, it means the price can pass through it either to the downside or to the upside. If you have gaps, price can explode very quickly, but also implode as well, depending on where price is. The key issue for us is that we understand the S&P 500 that trades in the main markets, in the US markets, is at a structural level of support, and it's been playing down here for a little while. Now I'm just going to overlay Bitcoin in the blue line. You can see that the blue line, which is of course Bitcoin, picks up a structural weakness or structural strength. It literally is the canary inside the coal mine. What it's seeking to do is seeking to basically tell us what are the major indexes going to do. Are they going to rally or are they going to fall? Bitcoin is a very powerful risk-on and risk-off indicator. It's literally like the VIX on steroids. These dotted lines are called SLs or Stanfield levels. The more you see them cluster together, the stronger they get. If you get weak ones, price can go down rather quickly, and a structural failure will always put a lower target on the radar. Structural passes do the opposite. So what we can see here was Bitcoin was saying to the stock market, I don't believe you. I think the VIX is going to spike up. The most important thing to realize, it's all about structure. If you know where the structure is, this is the only world's leading indicator of price. So you already know where structure can get hit from a sell perspective and a buy perspective. Remember, these are gravitational wells, they're not brick walls. When we turn to Bitcoin and overlay Bitcoin's price action with the S&P 500, which is the white line, Bitcoin is the candle line. This is on a 15-minute basis. One of the things you'll realize is the S&P 500 proper, which is the trading SPX, it doesn't trade all the time like Bitcoin does. In fact, it goes to sleep across the weekends, it goes to sleep for a large proportion of the day, then wakes up, does its thing, goes back to sleep. Now, the interesting thing to note is you can use Bitcoin as a forward indicator as to what the stock market could be doing. What you saw here was things were coming up and then the markets closed. When the markets closed, it looked pretty good, and a lot of people would just expect it to keep going. But Bitcoin came down, and it came down relatively hard. What did that mean to the major market indexes? They didn't keep on going up, they actually came down as well. And then we saw a bit of a sell-off, and what happened to Bitcoin? Bitcoin was still coming down, the major markets came down. You can see you can use Bitcoin and the major market indices to great effect. Also, overlaying the futures can be really, really good. You can see right here, this is Bitcoin against the S&P 500 futures, against the NASDAQ futures, the Russell futures, the Dow futures, and a couple of other major indexes. What you see is, of course, always directional correlation. If you want Bitcoin to overlay a chart, please don't think like that. That's going the wrong direction. Instead, what you're looking for is a directional signal. If Bitcoin is falling, we would anticipate risk off inside the markets. If Bitcoin is coming up, we anticipate risk on inside the markets. Very, very straightforward. And don't forget, it's all about structure. One thing is direction, but structure is the critical thing to understand. Hopefully, Rule 225 will be a little bit more clear. Bitcoin cannot escape the stock market's gravity, and you can see that actually Bitcoin can detect stock market risk sentiment. It is a very, very powerful indicator. If you have any friends or family members inside the stock market, inside commodities, that's another thing that we can talk about in a later video. Please make sure that you forward them this video. It could be an absolute game changer for them. To know these secret rules inside the market does take a tremendous amount of time, and you have to be looking for the rule as well. Thank you for being here, and thank you for joining us. If you've liked the video, please smash that like button and don't forget to subscribe. We'll have more rules for you in future videos. Bye for now.